Hello, everybody. My name is Mike Galarza. I am the founder and CEO of Entryless.com, and I am proud to present Gene Marks, Chief Executive of the Marks Group. And we welcome you today to our webinar of the next 2 years, your cash flow. We will be covering a couple topics, and it will be around 45 minutes long. So we hope that you enjoy this webinar today, and that you are also able to share your thoughts with us and questions on your right-hand toolbar. We welcome you to write any question at any point in time during the presentation, during the webinar, and we will set a couple minutes before the end of the webinar to address your questions. And please take advantage of asking Gene Marks any questions in regards to the cash flow and managing your business. He is really a expert for small companies, small and medium companies, and we look forward to get started. Thanks. So just to give you a quick overview of Entryless, we automate your bills and receipts capture, and we allow you to pay your bills online. And I'm sure that we are going to be covering a lot of topics in regards to businesses and suppliers and how to manage that cash flow. And that's where Entryless helps you. We connect with multiple accounting systems across multiple regions in the United States and across the world. And we look forward to helping you to manage that cash flow and help you execute those strategies that are going to be shared today by Gene. So with that being said, Gene, welcome.
Michael, thank you very much. And everybody, thanks for joining us today. If you're on the West Coast, good morning. If you're on the East Coast, good afternoon. It's just after lunch here, where I'm here out of Philadelphia. And look, we have a lot of stuff to talk about today. Like Mike said, please, by all means, put forth any questions that you have through the question panel on your right-hand side. Mike's going to be keeping track of that. We're going to go until about half an hour, 35 minutes after the hour, and then we'll take a break and answer a few questions as well. The whole goal of this session is to talk about how you can increase the cash flow in your business. What can you do in a slow economy with a lot of squeezes on profits? How can you generate more cash? And I've got 5 things that I want to share with you, 5 great ways that I know because I'm seeing it among my client base, and I want to share with you what some smart business owners are doing. So the first thing that I want to make clear when we talk about the #1 way is about being smarter about your financials. Now, just so you guys know, I am a CPA, a certified public accountant, so I've been kind of trained on knowing numbers and growing up around numbers. And honestly, my smartest clients, the ones that really have control over their cash, are people that know math. I keep a good, close eye on their financial statements, and I want to tell you 4 things that they do that specifically and significantly affect their cash. #1, the smart business owners I know are always reading their general ledger. If you don't know what your general ledger is, let me tell you, your accounting system, whether it's Xero or whether it's QuickBooks or whether it's Sage or whatever it is, they all have your general ledger. Your general ledger to your company is basically the diary of what's going on inside of your company. It's recording every single transaction. Whenever you are doing a check or receiving a cash payment or an invoice or a payables amount, it's all going through your general ledger. And hopefully you've got a bookkeeper this is doing it for you, or maybe you're doing it yourself, but your financials are being recorded there. Smart business people I know, they print out their general ledger once a month at the end of the month. It's probably not going to be that many pages, maybe 20, maybe 50, depending on the size of your business. But do that, print it out, take a pen, sit down and read it. Take a half an hour out and go through all of your accounts. You will learn quite a lot about your business. You'll ask questions about certain of the transactions. You'll wonder why certain things happen. Like, why did we pay that vendor twice this month? I only think he's supposed to get paid once. Or how that thing looks kind of unusual. That's a big amount. What is that? You're going to go through your diary of transactions for the month, circle the ones that you may have questions about, and find out answers about them. Remember, all good business people know that the devil is in the details, and when they are following what's going on in their general ledger, they are keeping the utmost control of the cash that way. That's #1. Number two, when we talk about being smarter about your financials, have a flash report. It's a one-pager. My best clients do this every day. They have an administrative person grab data from whatever systems they're using, put it on a single sheet of paper. It can be handwritten or it can be typed out, and it's left on their desk every morning for when they come in. The flash report is the daily pulse of your business, and you should know what certain amounts you want to have on there. Some of the popular ones I've got here on the screen, you want to know what your cash is every day. You want to know what your receivables are, your open payables. You might want to know what your backlog is or your year-to-date revenues. Come up with 5 or 6 important metrics for your business, put them on a daily flash report, and get those numbers. Now, here's the secret to a good flash report. It always includes a comparison to prior periods. So if your admin is going to put down what your year-to-date revenues are, you want to make sure that he or she is also showing you year-to-date revenues at the same time as last year, so that you can be like, oh, we're ahead or we're behind of last year, or we've got more cash or less cash than we had this time last year, or higher receivables or higher payables. So have a benchmark to follow. Have a flash report. Number 3, when it comes to being smarter about your financials, you want to make sure that you have something called a rolling forecast. It is not very difficult to do. I ask you once a quarter, take your financial statements, your income statement from your accounting system, put it into a spreadsheet. Most accounting systems will do that for you. And then extrapolate those numbers over the next 30 to 60 days. Look, you know what your overhead numbers are, so that won't be too tough to figure out what it's going to be over the next 30 to 60 days. You know what your margins are, hopefully. You know if you're providing service, what your service is, or if you're shipping product, what your cost of product is. So you're just going to have to make a very good estimate of what you think your sales will be over the next 30 to 60 days. Talk to your sales manager, look at your backlog, see what you've done before, make a good estimate of what your sales are. So if you have your sales and you know your margin and you know your overhead over the next 30 to 60 days, you can do a forecast. Here's the trick. Add into that forecast any unusual or extraordinary payments or receipts you think you're going to incur during the next 2 months. An estimated tax payment, a debt payment, a piece of equipment that you're buying. If you do a good forecast over the next 30 to 60 days and you do that every quarter, you will be doing what good business people do. They avoid surprises. And when you avoid surprises, you can better manage your cash. So do a rolling forecast, look out 30 to 60 days, manage your cash that much better. And finally, from the aspect of a CPA, I like my clients to get external financial statements. Now, there are 3 types of things a CPA can do for you. The least expensive is a compilation. If a compilation is done, you just give your CPA your general ledger. He or she takes it, puts it in the form of a financial statement, and then issues an opinion that says, my client gave me this information and I take absolutely no responsibility for it, but here's the financial statements. If you want to take the next step and get a review, it's the same thing. You give your CPA your financial information, your general ledger. They put it into the form of a financial statement, and then they ask you questions about it. And assuming that your answers are reasonable, they then issue the financial statements with an opinion that says, our client gave us this financial information, we asked them questions about it, and we still take no responsibility for this information. But that's okay, because that's what CPAs do. The most expensive thing is an audit. An audit is where you give your accountant your financial information, they put it in the form of financial statements, they ask you questions, they don't believe your answers, so they ask for documentation to support your answers. And then they issue an opinion that says, my client gave us this information, we did a lot of procedures to look at supporting documentation, and we still take no responsibility for these numbers. But the bottom line is this. A compilation is the least expensive service you can get. It might cost you a few $1,000, but it's a great service for cash flow because it brings your CPA, somebody that I hope is experienced and has other clients and works in your industry who can come in and give you their thoughts and their opinions on your financial statements. So that's somebody that's got some background that's going to be looking through your financials, even in a compilation, and giving you advice as to how you can run your business better. I like getting a compilation. I like getting external financial statements done, and I recommend it to my clients. I don't even do that as a firm, but I recommend it to my clients because why not have somebody who's experienced, financial person from the outside come on in and give you the benefit of your experience so that they can help you manage your cash flow better. So number one thing when it comes to managing your cash flow, you got to be smarter about your financial statements. That's number one. Now, having said that for number one, the number two thing is being smarter about your receivables and payables. So to that end, let me share with you guys just some really good tips that I've learned from smart business people when it comes to managing both their receivables and their payables. Now, the first is receivables management. Some of this stuff, hopefully you're already doing. Maybe some of this stuff you're not. You want to make sure you're doing it all. You absolutely want to enforce credit in your accounting system. Most accounting softwares have got credit limits that you can put in that will alert you if you're about to take an order or send an invoice for something that's over somebody's credit limit. Subscribe to a good credit service like Dun & Bradstreet, for example, particularly for new customers. Don't sell to customers that you've never done business with that might have a bad credit history. That will have a huge impact on your cash flow. Take that extra step up front. You will save cash down the line. Number two, if you can, take a deposit up front. Many of my clients do this. I do it as a business. The whole point of taking a deposit, particularly for a larger job or a larger order, is to cover your costs. So if you can get 30% or 50% of a project up front or even tied to a milestone payment, then even if that customer doesn't pay you in the end, you still covered your cost and you've taken advantage of that from a cash flow standpoint. So get the money up front wherever you can. It is more and more acceptable in most industries and places that I go. Number three, take a credit card. In fact, accept all of the credit cards. Drives me nuts when businesses and merchants and restaurants don't accept credit cards because they say they're saving on the credit card fees, among other reasons. I don't buy that. In today's world, where half of the workforce are of the millennial generation, people have grown up paying by credit card. People carry less cash. They expect to do it. And the last thing you want to have happen is to hurt your cash flow because you've got a customer that's ready to buy a product and you don't accept credit cards, only cash, and the person walks away from your business. Sure, it's a 2 to 3% charge for a credit card transaction, but when you think of the cash you could be missing by not doing the transaction, it's something you absolutely should be doing. Bill and collect online as much as you can, even if it's a matter of sending out a PDF document instead of the old sending things out through mail. Sending emails out with attached invoices or using your accounting system to send out invoices automatically, that increases the time that the invoice is outstanding and decreases the amount of cash flow time that you're out without getting paid. So get your invoices out there as soon as possible. Do it electronically. Accept payment online as well. Most accounting systems will do that. In addition, schedule reminders in your CRM system. Most customer relationship management systems, and there are many great ones out there that are very inexpensive, like Insightly or Zoho. Microsoft's got one. There's lots of great CRM systems out there to manage your customers. Put reminders and schedule follow-ups in there, particularly for those customers that might be a slow pay. And speaking of slow pay, focus on the slow payers only. All of these things that I'm telling you about, they're all great tips and advice that I've gotten from other clients, but the key is the 80-20 rule. Focus on the 20% of the people that are a problem. The 80%, don't worry about spending any time on them. They're good payers. And I think in your business, if you're like most businesses, 95% of your customers are good customers that pay pretty much on time. You need to focus on the 5% of those people that aren't. So focus on the slow payers only when you're doing these kinds of procedures. That will save you time. And finally, one of the best things that I ever did in my business was to outsource my collections. It would drive me nuts when a single invoice was outstanding for too long, and I would go and have to call a customer up, and I'd get all upset because I knew the service was done or whatever, and they're still not paying. I would get emotional. It would upset. I outsourced that a few years ago, and since I outsourced it to my bookkeeper, she handles it all. She is not emotionally involved. It is just her job, and she does it very well. And I don't know anything about it. I just know that it gets collected. She follows her own practices for doing that. That's what she does, and I can focus on what I do best. So outsourcing your collection is another big thing. These are all important things to do when managing your receivables. Now, let's talk about payables. Here are some specific things that I know that you want to make sure that you are following. If you are able to get online payments through your bank, online banking, or use services like Entryless provides, you need to make sure that you are automating your payables as often as possible. The less paper, the more time the less time you'll be spending on the process, and the further you will increase your cash flow coming in. So use electronic payment technology. I'm going to give you a few recommendations coming up. Number 2, pay only twice a month. I've learned this from some really good clients that know how to manage their cash flow really well. They cut off their vendors. They didn't pay anything other than 2 days a month. I like the 10th and the 25th of each month. Those are the days where you either send out your electronic payments or you cut checks. When you establish those 2 days, no exceptions, you're then taking control over the cash going out your door. You can plan and budget more. You can forecast better because you've reduced the chaos of money going out the door all the time. Just pay twice a month, which brings me to my third point on payables. Drives me nuts when consultants and pundits advise their clients to use their vendors and their suppliers for financing. You've heard them say this, right? It's cheap. You can, stretch out your payments to your vendors or suppliers. It's much cheaper than having to get financing through a bank. Well, I think that's ridiculous. Why would you possibly be playing games with the people that you're relying on to supply you with product for your business? To me, when it comes to our vendors and suppliers, and we recommend to our clients as well, don't just pay them. Pay them early. Don't even pay them on time. Pay them early. Establish such a great relationship with your vendors or suppliers so that if you ever need a favor from them, a special order, a special accommodation, they can look at you and say, you know what, these guys are great customers. We totally, we want to do that for them. They've always paid their bills on time or early. These are partners for your business. You want to make sure that you're treating them the right way. And oh, by the way, if a vendor or a supplier offers discounts, which many do, the rate of return on those discounts, the 1% net 30 discount, much higher than you would get if you were leaving that money in the bank at like 0% interest nowadays. So negotiate those early pay discounts with your vendors if you can. At the very least, have a good relationship with your vendors by paying on time or paying them early. Implement a purchase ordering process to conserve your cash. Just don't try to get too into the details. A lot of my clients, anything under $2,500, different people have got the authority to sign for. Anything over $2,500, you've got to sign for. The more you get involved in the minutiae of the day, the more you slow your cash flow process down and the more time that you are wasting. Having a good, authoritative, controlled purchasing order process will improve your cash flow and put more control and less chaos into your business. Automate your bill processing and payment. I think I talked about that earlier under using electronic payments. I'm going to talk about that with the technologies that I recommend. But finally, I know a lot of clients that like to get audited. Invite in once a year your technology firm or a different technology firm to review your overall infrastructure. Go online and Google utility consultants. There are many of them around the country. They will look at your utility bills from the past 2 years. They will find errors in that bill. They will go to your utility company and negotiate money coming back, and then they'll take anywhere from 30 to 50% of whatever they got back for you, which, by the way, 30 to 50% of something is a lot better than 0% of nothing. Utility consultants are a great way to pull in some extra money for you and make sure you're paying what you need to be paying for your utilities. Bringing in your insurance company, bringing in your freight and shippers once a year to evaluate what you're doing in your business, give you some free consulting, make recommendations and give advice for improving your risk or your shipping procedures. That will save you cash as well. These people are all looking to have close relationships with you and share their knowledge. Bring them in and take advantage of that knowledge. All of these things will serve to help you with your payables, and in the end will also help you with your cash flow as well. So here's what we've covered so far. You want to be smarter about your financials. You want to have that flash report, read your general ledger, get a compiled, do a forecast, maybe get a compiled financial statement, and you want to be smarter about your receivables and payables. And, outsource where you can, your collections, take money up front, accept credit cards. On the payable side, pay just twice a month, and don't mess around with your vendors. They're your partners. Pay them early, not just on time. Negotiate discounts if you can. Number 3, leverage technology for automation. And let me share with you just a few great technologies that are out there that you can leverage for automation. Now, yes, we're on a webinar for Entryless. I realize that as well. But I have to share with you, because I give this presentation, all over the place. And I mentioned Entryless, and Mike's going to get mad with me, but I also mentioned some of Entryless's competitors as well. It's an industry that is exploding, because just a few years ago, whenever you received a scanned document or a PDF, there was nothing that you could do with it other than just storing it for good measure on your computer and saying that you're going green. But nowadays, that has all changed. Now, when you receive a document, a scanned document, great technologies like Entryless and some of their competitors can extract that data from a scanned document, put it into a format for you to review and approve, and then immediately bring it into your accounting system. And I know this sounds harsh, and I hope Mike doesn't get mad at me for saying this, but this type of technology, it eliminates accounts payable people. At the very best, it helps you reorganize your accounting department and make people more useful. And I know that does sound a little bit harsh, but let me tell you, when the next recession comes, and it will come, those companies that are operating at the lowest level of overhead and the most efficiency, those are the ones that are going to survive the next recession. And it's products like Entryless and other payables and receivables automation technologies that are eliminating people and automating more and more, and the smart business owners I know are investing in applications like that. Now, besides Entryless, if you don't already, have alerts or workflows in your accounting system or your CRM system. Knowledge Sync is a neat little product I think it's owned by Sage now. If this, then that. SQL triggers, which are behind any SQL database and any SQL developer can write for you, or just look at your accounting software to see what kind of workflows and rules and alerts they have. Think about it. Before any receivable becomes due, maybe 2 days before, you want to get an email alerting you that invoice is coming due, or directly to the customer, reminding them that invoice is due. Or maybe you want to have an alert for when an inventory level falls below a safety level so that you can reorder more before you run out and then you miss orders. Or maybe you want to have an alert that tells you when a salesman is not hitting his quota yet for this month, so that you can do something about it proactively and make sure that you're recovering your cash flow before the month is over. All of this stuff is done by alerts and workflow, and those are just 4 technologies that will help you do that. On mobile docs and payments, DocuSign and EchoSign are excellent mobile documentation applications. You upload any document you want, a PDF, a Word file, to DocuSign or EchoSign. EchoSign is now owned by Adobe, by the way. They've renamed it to something else. But then you can send that document out to your recipients, and by e-signature, it becomes legal. And why that's important is because instead of sending these documents by even email or regular mail and it getting caught up on a spam filter or getting lost or sent to the wrong place, That hurts cash flow because it extends the process of getting something approved. With DocuSign or EchoSign, you've speeded up that process 30 to 50%, and that way you can get approvals quicker, and that way that increases your cash flow. And then, of course, if you're in retail, merchant, restaurant, you really want to make sure you're accepting all forms of mobile payment nowadays, just like credit cards. Square and PayPal and Android and Apple Pay, you want to give your customers all the options possible to make their payments. Finally, I like these 4 cloud accounting applications. There are plenty of good ones that are out there. These guys there's a whole explosion of cloud accounting application having right now. And why cloud accounting will increase your cash flow is because it gives you the ability to access your data, approve payments, do data entry, update information from wherever you are, from whatever device you're using, at whatever time of day you want. It automatically updates the database. Everybody has access to it. That speeds things up, provides more productivity. That's really good stuff, and that's what cloud accounting applications do. So those are just 4 great technologies that you want to consider that will help you increase your cash flow this year. We're almost done, okay? So we're being smart about our financials, being smart about receivables and payables, leveraging technology for automation. Smart business owners I know are also outsourcing. They are trying very hard to keep their payrolls under control with the rising cost of employment, minimum wage, paid time off, vacation time, overtime rules, and all of that. Outsource wherever you can. It will help your cash flow. Look at these sites, Upwork or Guru or even Craigslist, to find independent contractors to do work for you. Have a good independent contracting agreement, making sure that you've got all the bases covered. I like to go to LegalZoom, has good independent contracting agreements. Be careful with the IRS. If you are paying anybody more than $600 a year, you have to give them a 1099. The IRS has very close rules about who you can treat as a contractor versus whether or not they should be an employee. This is an election year issue because it's all about the sharing economy. So you want to make sure that that person has got complete independence. You want to make sure that they're using their own tools. You want to make sure that they're free to hire whoever they want to do the work. In effect, your independent contractor should be arm's length, their own business, their own thing, just doing a service for you. You're sending them an invoice and they're getting paid for it. That will keep you under the right wing with the IRS. Now, if you screw up, you're going to be subject to some penalties, so be aware of that. If you have an independent contractor that the IRS says should be a full-time employee, you're going to owe back taxes for payroll and fines and penalties and interest. You might have to make them whole on their retirement plan as well. And if the IRS or even the Department of Labor finds that you were doing this and willfully, they could find you in criminal contempt. So it could be that much of a bigger issue. The bottom line is this, though. A lot of my clients, a lot of small business owners, they're outsourcing. They're saving cash by doing that instead of bringing on those full-time employees. Follow these best practices. You'll do it the right way. It will have a great impact on your cash flow. Finally, we can't talk about cash flow without talking about raising money and finding new capital. And I have to tell you, there are 9 sources of capital that are available now that just weren't really around a few years ago. And I just want to quickly make sure that you're aware of what they are. Number 1, of course, is crowdfunding. That's brand new. The rules just got approved back in 2015, but now non-accredited and unaccredited investors can raise money. You don't need to have an audit done. The crowdfunding sites are not liable. You really want to look into equity and debt crowdfunding for businesses. If you Google that, you will find many services and many firms that will help you do that. For the next piece of equipment you want to buy, the next property you want to buy, the next venture you want to go into, it's a very inexpensive source of financing that is going to be available to you and will only grow over the next few years. Online lenders, I know you've heard about these. Can Capital, Cabbage, I mean, there are some of the leaders that are there. They charge between 30 to 50% interest a year. So you think to yourself, who would want to get money from an online lender? Well, let me tell you the reason why. Most of the people I know who get money from an online lender, they don't pay 30 to 50% annual interest. They only do it for a couple of months at a time because you get quick approval. There's no personal guarantees. You can take up to $150,000 on some of these services. I have one client in Philadelphia that needed to sign on a lease in a great location, needed to come up with 15 grand to sign for a lease. No bank was going to lend him money in 24 hours. He got the money from Can Capital right away, put it down, and then arranged for a bank loan within the next month and paid off Can Capital. So it's short-term, expensive, but readily available financing that's available for quick deals that you want to do. So online lending, absolutely a really great option this year. A few others, peer-to-peer lending. This way, like from Lending Club and Prosper, crowdsourced loans are being given out for businesses, or you as an investor can invest in one of those crowdsourced platforms and get a higher rate of interest than if you just left the money in the bank. Factoring is different than it was just a few years ago. There were great services like Fundbox and Bluevine who provide capital at relatively inexpensive. They'll take over invoices, particularly of stuff that you might be selling overseas and get payments for. They tie into your accounting system. Retailers are offering loans now. Staples, Sam's Club, they're partnering with services like Lendio and Lending Club and offering their members cheaper interest rates than if you were to go to those services directly. PayPal and Square, among some of the finance companies and merchant payment systems that are now offering advances. So they're less expensive than using a credit card. You get very quick approval, and it's all tied into what your cash flow is. So if you're a merchant or a restaurant and you're a PayPal customer or you're a Square customer, look up their financing options. Very quick way to get cash to finance a new piece of equipment or whatever you need to do for working capital, and they'll just pay it back through your cash flow that you're receiving on customers' credit cards. The Small Business Administration has changed significantly over the past few years. They have a new director, Maria Contreras-Sweet. She's excellent. They're more out educating banks. They have multi-language. Basically, it's a great option now. It used to be a bureaucratic thing to do. Talk to any banks that offer SBA-backed loans. They know a lot more about it. They're more willing to give those loans out as well. And if you qualify as a small business, less than 500 employees, would be an excellent choice for you in 2016. The government is giving out lots of grants as well. Go to grants.gov to find out more information about them. It's free money that's out there and something that you should definitely consider. And finally, a lot of individual companies are giving out grants, a plethora of them. FedEx gives away $25,000 a few times a year to winners of its contest. Miller's Tap the Beer Contest gives out $300,000 to a list of winners every year. Chase Mission Main Street Grants gives out $150,000 grants individually to 20 businesses a year. These are just a few of the examples of companies that are giving out grants. Fantastic option for you to get money. They just want good PR because of it. You can take the cash and run with it. Really, really good options, and these are sources that didn't exist before. So, in summary, when we're looking for the 5 ways to increase cash flow this year, number 1, be smarter about your financials. Get that daily flash report, read that general ledger, have an accountant come in and review or do a compilation, do a forecast. You'll have much better control over your cash. Number 2, be smarter about your receivables and your payables. Take deposits up front. Use credit cards for goodness sake. Outsource your collection. When you're doing payables, pay twice a month. Don't underscore pay your vendors on time. Very, very important. Number 3, use great technologies to increase your cash flow. Entryless is one of a bunch of hugely exploding industry of payables and receivables automation. They will cut back on your overhead. Great technology to consider. Also consider others like alerts, for example, and of course mobile payment and document management tools are also really, really important. In addition, we talked about raising money through different ways that you can get it. But first, you would outsource more because outsourcing saves money on payroll. But number 5, look for those 9 new ways of capital that are available to you now. The one that you really keep your eye on is crowdfunding. I think that's going to explode in the next couple of years. But get a loan from Staples if you want to. Go back to the SBA or get a grant from one of those big companies that are offering money out in exchange for good PR. These are all great ways to get cash in 2016. So, boy, I've talked a lot, and I realize that. Mike, I hope I have not put you to sleep, and you're still there. But I guess it's time we should talk a little bit and see if any questions came in.
Yeah, totally. I think this has been fantastic. Actually, this is something that we commonly get asked between our customers, that owners of businesses, on ways to improve their cash flow and what other technologies they're able to use. So I think this has been very, very comprehensive, and it's been great. So we have a couple questions over here. So I'm gonna read you, Gene, just a couple of them, so that we can get your insights there. So one of the business owners over here is asking, what is the biggest hurdle when implementing a cloud accounting system?
Great question. So the question is, what is the biggest hurdle for implementing a cloud accounting system? And there's actually a couple of them that are kind of equal in size. Number one is there is a cultural change. Back in the day, it used to be, Mike, like you wanted QuickBooks, you paid a couple $100 for QuickBooks, you stuck it on your computer, and away you go. Now, you don't do that anymore. Now you're paying the monthly fee for the cloud software. It's no longer just a couple $100, but now it's $20 a month or $50 a month or whatever it turns out to be. So it's an annual relationship, and your data is no longer on your computer. It is in the cloud, and a lot of business owners sometimes are resistant to that because they fear for privacy and security and all that kind of stuff. And I always tell my clients, listen, your data has always been in the cloud. I mean, the very first cloud-based providers in the world were banks, right? I mean, you didn't have stacks of your savings weren't saved in $20 bills around your house. For years you would deposit it with the bank, and it would go in the cloud somewhere. This was back in as long as I can remember, and then they would send you a statement saying, yeah, we've got your money. So, but the point is that with an accounting system, putting your data in the cloud, that's always been like a big hurdle to a lot of my clients. So, those are the things that stop you. I can assure you, although, there are certainly concerns, they're worthwhile. Paying by the month and subscribing to a cloud service means you'll get, online support. They can keep their software updated all the time. And because you're in the cloud, yes, there's always data, and data breach concerns. But these people, this is their model. They've got a lot of smart people, smarter than you and me, who are, protecting this data because it's their business model. And they, you then have the ability to integrate that data with so many other great applications and services like Entryless. So that's
exactly. And that's just exploding. I mean, last week we were at a Sage Summit conference, and it's just incredible to see all the other partners that are offering really add-ons for very specific industries. So that even if you are, a local brewery, you can even get apps for that particular business and how to handle your inventory. So I think we're a very interesting time. And actually that brings me to another question from one of an accountant in the United States. They're asking what are the benefits of implementing a purchase order policy in a company. They in essence, they understand what that brings to a company, but how to overcome that process so that it doesn't actually becomes an extra overhead for that particular company and bring the benefits of a purchase order.
So it's such a great question because, listen, I run a 10-person company, Mike, and a lot of my clients are smaller companies as well. So sometimes accountants talk about stuff and it's like they're out in in another universe because you're like, that's not real life, I mean, like implementing a purchase order process. I mean, okay, big companies can do that because they've got resources and they've got purchasing departments and accounting department. Small company, you have the same person doing 16 jobs. It's kind of tough to implement the process. So here's my advice, though. Again, I can only take this from smart, clients are smarter than me that have done this. You keep it simple. I mean, when I say implementing a purchase order process, I actually mean more of an approval process. And I don't mean that you should turn your company into some bureaucratic thing. The smart clients that I know, they allow certain key employees to place orders on behalf of the company. That's part of their process, under a certain amount, so that the owner themselves doesn't have to get involved. But as part of the process, you set a limit and say, listen, if we're going to buy anything more than $2,500 or $5,000, I'm going to need a purchase order filled out either online or even manually, and I, the owner, need to sign off on that. That's how and that's the whole process. That's it. In a small business, I'm not asking for anything more complicated than that. I'm just asking for just a good, simple approval process that gives your key people the leeway to do what they got to do, but also keeps your cash under control because you're approving things of a more significant number.
Yeah, that's true. And I actually relate that on the way that we manage Entryless cash flow. Actually, we don't have a formal process of issuing PO orders to our suppliers, but we do know what do we need and when we need it, so that we can actually schedule the purchase to forecast actually the outgoing cash flow of our our own application. And I think that sort of relates on that doesn't really matter if you are a company that have 1,000 bills a month because maybe you are buying and selling products, or even if you are a software as a service application like Entryless, where you really rely more on actually the employees than actually buying and selling pieces to sell, right? So it's more of a service business. Yeah, I think that's very interesting. And actually, I wanted also to comment here that we spoke as well last week with one of the users of Entryless.com, with Annie Aladrova from SwipeSense. She's the director of finance, and actually it was a very interesting conversation. We actually went to have lunch, my CTO and myself, and it was very, very enlightening because we found out that she is now saving 3 hours a week in just payables by using Entryless. And it was really, we know the benefit that Entryless provides, but when really seeing that live, it really puts into context what applications like e-signature, cloud accounting, taking advantage of really all the advice that you have really given us today, and that will be available for to view later on via recording on YouTube, Vimeo, and other video channels. And you can really see the power of implementing these strategies and how that can be a really life changer for some companies. So I don't know, Jean, if before we close the webinar, if you'd like to share one of your stories with one of your businesses on how they have taken advantage of all this great material that you have put together over here on the strategies.
Sure. I mean, here's the story that I can tell you, Mike. I don't have one client that's taken advantage of all of these things. I have many clients. We have about 600 clients in my company. I have many clients that have each taken advantage of different things that I've talked about today. And that's important to recognize that, we've gone over a whole bunch of different ways to increase your cash flow. And so, I just don't want anyone listening to think, oh, I got to be doing all of this, this is, you don't have to do that. All that I have learned is specific companies, specific clients of mine that have taken specific things and employed them the best. I have a roofing company called Russell Roofing, which is outside of Philadelphia. And I learned from them about outsourcing their receivables. It was very, very important for them to do. I have a pension, they're called Pension Guarantee Corp down in Philadelphia, that actually had migrated over to Xero.com, Xero software, and they're using that for cloud accounting. And because of that, they're able to do their invoicing and cash receipts, and the owner can get all of his information wherever he is from his iPhone. So I learned a lot from that. I have a client called Griff Paper and Film. They're located in Bristol, Pennsylvania, and they use Knowledge Sync. So they've got that tied into their accounting and inventory and CRM systems, and different people are getting email and text alerts for when things are happening that are, that they need to know about before they happen. And all of this goes back to cash flow. So the only thing I can leave you with, Mike, and with all of us here that are on this call is, you can watch this again online. The handout is available to go through. Just pick a couple things out that really make sense for your business and deploy them. Don't think you're gonna do all of this. None of us do all of this, but hopefully there are enough good ideas here that you can find a few things that'll really help.
That's great, Gene. And correct, you can actually download the presentation today. We have it in a PDF format, so it's on should be on your screen on the right side at the Go to Webinar control panel. You can just click where it reads the next 2 years deck, August 2016 PDF, and pick really the technologies that you think will make a bigger and deeper change on your company today. So with that, Gene, I'd like to thank you for being able to share all these insights. It's really incredible, you know, when you are able to share this based on serving over 600 clients that you have. I think it's really, you know, something that speaks for itself, and that others can do and implement for their business to either generate more revenue or simply be more, you know, increase your profit. So, Gene, I'd like to, on behalf of Entryless, thanks for the webinar, and we look forward to welcoming you in the future.
Thank you, Mike, for having me on, and thanks everybody for spending the time, and hope everybody stayed awake. So thank you.
All right, thank you.